And good evening. This is the Eye of the Storm podcast, the big picture update, along with an Elliott wave update for the S&P 500, the NASDAQ 100, the 30-year bond and the 2-year note, and the 10-year note, gold, and the dollar index. I'm having to combine a little bit because I really spent a lot of time over the weekend trying to determine what the markets are basically telling us and what they feel the next direction or continuation where it should occur. I got to be honest with you that even after watching Globex open today and watching them to try to push one side higher while the other, like the bonds are going lower, the dollar still basically unchanged, slightly lower maybe. It's not making a whole lot of sense as to what they're doing. So I'm left with the same thoughts that I had Friday. And that is that within the equity markets, because of 0 days to expiration options, which again, just for those that aren't aware, really is representing between 40 and 45% of the total options volume on any day. Now, that includes a lot of asset classes and a lot of options, both puts and calls. I mean, just it's wild. And what is seemingly happening, even within my counts, that we're seeing the market kind of come in and hold within a level or an area that is representative on where the call strike is versus where the put strikes are. So we have a call wall and a put wall coming in to start the day. And it traded to both sides several times until finally at the end of the day, and particularly in the S&P, they pushed it to 4,000. They pushed it above 4,000. That was the move that they were gaining for. But they went down and they tested first 39.50, which is where the put wall was. So they force a lot of positions to either be liquidated, cut out, gone, and then they go back for what they originally wanted, or it appears that way. But this what seems to stay in control. And once again, within the SPX, within the S&P, the market has literally been stuck between, let's say, 3,800 and 4,100 or 4,200 since last October, once we got back above that 36, 3,700. It's done nothing except chew itself alive up and down and up and down and up and down. So I spent a lot of time over the weekend just thinking to myself, okay, if it's not, because the movement on Friday, again, in the ES, and I'll talk about that in just a moment, really just kind of brought this back up. Now, this is the daily chart. So I start to look at it as like, well, what if this wasn't the A? What if this is not the intermediate B? Now, that far, I can only go back to here because, to tell you the truth, I went to the weekly chart. I am still fairly okay with this being intermediate A, and we are in a B, and we're coming down in a C wave. But I did go back to say, well, if this carries out and goes above 42.13, I think it is that high. Let me get over to it. No. 4,200, actually, according to what this is telling me. That's just, 4,200. This is basis the cash market. It's 42.24 basis the S&P. And there's still right now about a $30 premium in that June future. So it gets even more crazy when we start to look at things and really kind of go, what are they actually trying to do here? And again, this is a bunch of these are trading desks and hedge fund managers and everybody else that it doesn't seem that they're really now doing anything for the long term. They're really just trading day to day, week to week. That's what it appears like to me. So we get to make some choices as to, is that what we're going to do? Now, I want to kind of just talk about that. There's a lot of people that just kind of say, well, Elliott wave doesn't work. Elliott wave is this, but Elliott wave does work. And because it does follow and it does really track the emotional behaviors of what the market is telling us. So when people are assuming that, oh, typical Elliott wave, it's not telling me anything, I go by assuming that people are disgruntled by what it seems to be that the principle, the Elliott wave principle's ability to be predictive. I mean, I can understand that. But as I have discussed, impulse moves are easy to spot and trade because there's only one pattern. 1, 2, 3, 4, 5. That's it. That's a 5-wave move. That's it. But now let's take a look at, because within those impulse moves, waves 2 and 4 are counter trend. And within those counter trend moves are two basic patterns, a zigzag and a flat. But here we go again. Within the flat, there are 13 different scenarios that can play out. So I can't be 100% sure of anything until the market tells me. But I can be 100% understandable about the frustration that traders are feeling right now. And trust me, I'm one of them. Because here I am trying to analyze and figure, it's like we really need to start heading lower because of what I'm seeing in terms of the banking industry, this and that and everything else. But what it seems is that we've got a lot of traders who are really focused on one day. And that's it. And then they'll focus on the next day. Whether that moves the range lower or moves the range higher, yet to be seen. So the frustration is not and should not be with Elliott wave. It isn't the principle itself. It's the markets. But I get it. I really understand that if you're a swing trader or a position trader, the gyrations in the market are truly seemingly against the reality of the situation, and they are making us crazy. And if we're constantly losing or on a losing side of a trade, the only thing that I can do is offer this. So the marketplace has changed dramatically with the addition of these 0 DTE options, which are 0 days to expiration options. So the volume again has accounting for about 40 to 45% of the total option volume, again, across all the asset classes. So trading these markets has changed. The ability, and I'm going to put quotes around it, manipulate the indexes and individual underlying stocks has created an uneven trading field. So the massive movement of money from one asset class to another has also created a mess with the expectations of what the market should be doing under the current economic climate. So the bottom line is that the problems confronting the economy are real. The problems that are creating the problems have not been resolved. The errors of the past 13 years will not just roll over and allow for continuation of the good old days. So the big picture here, folks, the big picture has not changed, only the near-term picture. And I suspect that it's going to remain the case as the markets struggle to find their way forward. Ultimately, the cycle will pick up again in the markets. All of them will make adjustments again. So going back to the SPX, I went over and I started to think, well, what happens if this is just a smaller degree ABC, and this is A, and this is the B, and this is what, X? Or, it gets to be confusing. And I'm like, no, this does count best as an A. I'm on the weekly chart. So I had changed it on the daily and kept moving it up. I moved it up to the weekly. I thought, no, because then this is all going to be different in here. So the problem really, these were clean, basically hanging out between, 3,700 and 4,200. That's been going on for a long time. But the patterns themselves continue to be clear, at least to me, on the SPX, on the cash market. So here's how I'm coming up with what I'm working with right now. And it may not last as we see them continue to press and push. But I'll get over to the futures market in just a moment, and let's see if this all doesn't maybe just work out and fit. So here we are. I am going to leave this right here. So basis the cash market, an intermediate B wave did complete up at that 41.93 or 41.95 high back on February the 2nd. Now we've already done what I'm counting at best as a 1, 2, 3, 4, 5. Before, I think I may have put that a little bit different. But then that threw this off. So being that this did what it did, I'm now backing up and realizing that this probably was minor 1 and this probably is still minor 2. So again, in the cash market, I'm going to bring it down. I'm going to take a look at that hourly chart, right? There's the 2. In the cash market, we got that big decline. Then we had a gap up into the next week or the next day, actually. 1, 2, 1. This is a 2. What can't this very small wave 2, which actually does when you're trading it, is not very small at all. But in terms of the larger picture, it is. It cannot go above 4,007.66 to be exact. 4,008, we start to break the pattern. We start to believe that then this is indefinitely an ABC. Then I'm going to leave this as a C. This gets turned into ABC of a subminute degree. This becomes a C wave, and I put an X underneath it. All right. So these turn into subminute, subminute, and this turns into a subminute wave X. Now, that would suggest that the entire market is going to do an additional ABC. Now, if that's the case, I can put some qualifiers in, just some initial, as to what can that second ABC look like. Again, we're looking at where the second ABC would be equal in length to the first ABC. We're looking at 41.39. Now, I'm going to go back out. Let's go out to the 4-hour chart. It can go above there. It just extends this minor wave 2. Right? I'm back down to that hourly. It just extends this minor wave 2. If this turns into an X wave, it just extends this 2. Now, where can't that 2 get to? Go back out to the 4-hour chart. It can't go above, it would be not there. The 2 cannot go above, if this is wave 1, it can't go above 41.96. Basis the cash. Okay, so basis the cash, we can't go above 41.96, but it certainly can keep going for a while. And then we're looking at a double ABC. I'm going to go back down to that hourly chart, show you. This is the alternate. I'm going to let the cash open. I'm going to let these markets work this out and see how it comes up. So again, if we sail up on tomorrow and we're above 4,007, actually 4,008, I'm going to flip it. This is going to become an X wave. This becomes ABC. This becomes a subminute wave X. And we're starting in wave A of the second ABC. Okay? That's going to be the break point. Now, I'm not going to be able to tell you what I think the reason is, because I don't have a reason why they would choose, but it could be the narrative. It could be what the market is feeling that it needs to prepare itself for in terms of what it's now taking in from the banking crisis, from the Fed, from the Treasury Department, all of this information, and they're going to try to decide what direction the market should go in. I think it's really kind of loony, but that's what's going to happen. So leaving it there. Now, to quickly, so that we're getting this all together, I'm going to take a look at the future, which you can see is already, they're pushing it. It's almost up another 20 points. But when it first came in this morning, the first quote was 40-20 bid. Well, they're there. They just went there. Until we filled all that? Was that just an indicator? Because they actually opened it a little bit lower, tried to push it lower, immediately came back and bought it. Now they bought it all the way up to 40-20. If that was their goal, they've reached it. Let's see what happens now. But here as well, this wave 2 could get extended, but it cannot go above this wave 2, which is 41.23 on the future, the June future. So, but it can get up dang close. But I have to move this. So if this comes in and this turns into an X wave, it's going to be on the subminute level. And I would put an X down there, and these would be A, B on this degree, a sub level, A, B, C, X, 1, 2, into a third. And this is the craziness. How the market broke. And how do I want to count this? How does this all work out? I have gone and been busting myself between all the different angles that I have. So I can put it down here, A, B, C, possibly, and then it is the X, and it would go here, and this is the second ABC. I mean, this is still strength by strength. And why they're choosing, I couldn't begin to tell you. So once again, on the hourly chart, putting it back on the candlesticks, what I'd be looking for tomorrow is more clarity once we get the other, time zones in here, and they're going to put their 2 cents in, and seeing immediately they come out, stocks poised for a higher opening. Boom, Barron's. Well, gee, Barron's, how is that? Well, because they're opening the futures higher. That's not saying that we've still got a lot of hours between now and we show back up tomorrow morning to open our regular session. And a lot can happen between now and then as well. Right now, if I kept it on this count, I'm looking for this to complete. It is again an irregular 2. Cannot go above there. If we stop below 40.39 basis, the futures, and turn, then it's going to be a 1-2, and we're going to drop like a stone. If it goes above, I'm going to put an X, and we're going to be looking for another ABC up. Okay. Now I'm going to go over to the NASDAQ, and I'm going to start here with the NDX. It's the same type of a story, except here, these things are all out of alignment because I've done so much shifting things around. Here again, I left this as an A. I left the ABC in place. If anything, this turns into an X, which I've left there. So this actually is the alternate count. I did not take it off because I know I wanted to show it in one market, so I left it here on the NASDAQ. This is what the alternate count will look like, the A wave. And so instead of the B wave being here, we finished a C wave. We've done an A, B, C, B, and a C down. That's called an X. And now we're in 1, 2, 3, 4, 3, 4, 5. 5 should take us above 1975. 12,975 to finish the 5. That would be the second A. Then we get a B, and then we get a C. Where can it end up? Up in here. 203, 415. Here's what I really don't want to see. I don't want to see it above 13,721. And you're going like, wow, Michael, you didn't want to see it above 13,000. And here we are above 13,000. If you can tell me why, and don't give me a bunch of stuff about, the Fed and this and that, because there's nothing coming out for the Fed that would suggest that they're going to stop and go back to easing. So if the narrative wants to stay out there, that's fine, and people are buying on it, then they do it at their own, whatever. They're the one. If it's algorithmically controlled, then we know it's going to go back and forth, and there's going to be a lot of trading underneath it. So again, just in terms of what we're seeing in the market, it becomes the situation that, seeing the market move and just stop people out and just going crazy with stuff. And that is really what becomes bothersome. So if I take a look and I'm looking at stuff, and I'm looking at the bond market having trouble getting itself rallying. If the bonds are really going to be in a rally phase to continue to finish their larger intermediate B wave counter trend rally, which I'm going to go over in a minute again, the 30-year bond is having a hell of a lot of trouble getting itself to stay above 133. Excuse me. Every time it gets up there, it may get a little further on a spike, and then they jam it lower, and then they jam it lower, and then they jam it lower. What is the bond market trying to tell us? Excuse me again. So when we take a look at these things, they're not balancing out. Why? Because we don't have enough information to really say that the banking system truly is safe. We're seeing they're going to start to fall. How's the market going to react to that? What happens if we come in tomorrow morning and Deutsche Bank has decided to go bust? They'd start to do a Credit Suisse. And we got it. And then, European Central Bank, they're not going to jump in and try to rescue Deutsche Bank. I don't think they would. But what does it open up if it does happen? Or what happens if we get another group here in the United States that could really start to lose? Who's out there on the list? A lot of banks, big and small. Now, we're really going to start to focus on the regionals. Who's going to step in? Take a look at First Republic. They're not happy with whatever they did, injecting $30 billion to shore up the deposits. I mean, it's just like, it's nuts. And for the market to turn around and go, well, we're just going to run anyway, is more nuts. But they are. So really, what does it become? It becomes an idea or a thought process for me where it's like, gee, I'm really glad I'm not a position or even a swing trader, because they're getting killed. Even when you have the right move on, they're coming and they're knocking you out. They're causing losses because they run stops all the time and get people out of the way and then go ahead and do the move. I'm not sure why. I don't, there's a lot of it I'm not truly understanding, but this is how these things are functioning right now. And it happened several times during a day. And when we get to that expiration, which, by the way, is every day now, every day in the queues, folks, every day in the queues, there's an expiration. And it's a direct correlated, because the queues are 100. It's the NASDAQ 100. So there's a definitive correlation between that and this. So looking at the cash market, this is the implications of the alternate count. So if that's the way it is, then we see I took that B wave away. The B wave will come in somewhere up here and set the stage for a mighty nasty drop. But it looks like we're probably going to get it. And this is the path. Now, let me take a peek at there, where I've left this on ABCB. We're in the C wave still. Now, this I've left on, and I just need to take this down to the hourly chart and let's take a peek. Here we are inside here, right? So I have not switched this around. I've made it where the C wave's complete. The minor wave 2 is way up here. 1, 2, 1, A, B, C. Here we get another 2. It gets up there. It's doing it. It can go to 958. It can go to 989. It can go to 13,031, which then it equals there. What it can't do is go above that. But maybe it's got a little bit more to it, and then it's going to do a trip and just start to drop. I don't know. But now you've got both sides. I've shown you both sides, what the NASDAQ is capable of right now. Either in the NDX, 3, 4, 1, 2, a 5, right? So we've got here, there's the alternate, 1, 2, 3, 4. We're going to move in that 5. There's the X wave. But this time, it only turns into a wave A. Then we get a B, and then we get a C, and it still goes on. Okay? So, but again, this is the cash market. We're seeing in the futures market that it's here as well. It's got a whole lot more premium in it than the cash. Cash closed at 12,767 on Friday. This is up 41, so it was already 12,800. So it's about $130 premium, $140 premium. So if I got 140 on this, this is going to open up 127,800 up in here. I think. Maybe I'm wrong. All right. So we'll see. So here we've got, let me just put this in. And we'll see what the potential under the alternate count, what this wave 5 could look like. 618, 13,108. 100, 13,586. And so it's just crazy. And none of this actually is to be held, because the market, I don't think the market truly understands. So first one I got a double at 618, 13,108. That one can seem pretty real. You know, we're getting ourselves way above on the futures market. We got up to 13,088. What's to say 13,101? It can't be reached. I bring it all back around. So again, I had it all laid out. I'm going to present it. And then I looked at it again. I thought, no, I can't, because it's not matching against what I'm seeing in other markets. So this is one of those situations I have to let the market do what the market wants to do, and then it'll tell me. And in terms of trading, again, I want to just emphasize that the trading opportunities on Friday, on Thursday, on Wednesday of last week, they were pretty incredible. But you had to be in a position to where you could just go with the flow of the up move or the down move, whether they were quick, whether they were not quick. There were different strategies that can be put into place. A lot of it was crazy, but if you can keep a clear mindset of just riding what they're doing, that's it. I don't care if it goes up or down. I don't care why they're taking it in either direction. So now it's absolutely in a mindset. You got to take everything else out and go into this other type of a mode, of the other type of a mindset, actually, which is just like you're following what the market is going to do. And on an intraday basis, so on a very small time frame, I can trade. These moves are great. Right now, we're on a Sunday, and so it's not really looking like much of anything. But if I put this out and go back, these are great moves. These are great moves. You just got to catch them. This is thousands of dollars. This is a huge move at $20 a point. So let's just take it from 12,850. It went all the way up to that's a $59 move. 59 times 20. That's $1,180, bottom to top. You can get in there in between. You start taking out some, and that's one contract, by the way. So day trading in my life rules right now, just because that's the way the market is trading. And to get caught in these swings and these runs and whatever the algorithms are gearing for is maddening. All right. That's it for the equity markets. I'm going to go over and take a look at the bond markets. Let's take a look at the 30-year bond. Now, this, I said many times, this was creating problems for me. I went back over the weekend and I thought, okay, this does make sense if I do 1, 2, 3, ABC, 4. So it's in a regular. And now we're in the fifth wave. But guess what? Now, the fifth wave does not have to be as powerful as the third. In fact, we don't expect it to be as powerful as the third. But boy, look what it's doing. It still cannot get itself above 133. Went up and gave it a test, pulled back over a point. Went up and now got stuck at 132.20 and sold off. Now they're doing a little bit of a recovery, but not much. Not much. Now, you got a narrative being spun that a lot of traders out there saying, well, the Fed's got to ease. The Fed's got to ease. Give a break to the banking system. They got to bring the rate down. Okay, let's take a look at that for just a moment. The Fed created the situation that presented the inflation numbers that we're having right now. They created the situation that the banks began to fail as well because they took out deposit requirements back in 2020. They took those away. You don't have to have them. You just money, money, money. Just put it out there. We got to keep the economy going. We got to do all these things. And as long as interest rates were at zero, no problem. No problem. They run in and bought 10-year notes and all these bonds at very, very low interest. And then interest rates started to climb, and they climbed quickly. And these banks got into problems. Credit default swaps are getting killed at the moment. Banks are very heavy into credit default swaps. That's how they do things. That's what the trades do. A lot of firms are falling into trouble with them. So we have a lot of things happening in the credit markets, a lot of things happening in the bond markets, a lot of things happening in the equity markets, and nobody's able to put the picture together to say, we're not going in the right direction. Or we are, and let's pick up the pace. And what happens? We sit in between. So in the 30-year note, if I'm correct in that this is a fourth wave up to finish a minor, actually it would only be, could be just wave one, but I'm going to maybe change the degree on these a little bit. These might be minutes. In fact, they should be minute. I'll have to change the degree. That was my mistake. They're minute degree 1, 2, 3, 4, and a 5, and then we're ending the C wave, and that's going to be then put the the intermediate B wave. But I'm looking for it to come up here, or higher, So I want 100% or greater on this move, and we're getting stuck again at very low level resistance. The overall move in terms of the bigger picture should be getting us up to the 143 level in the 30-year bond. We're getting stuck at 133. So again, this needs to pick up and push and go, getting up to 133.22, maybe 134.24 before we pull back. Within this fifth wave, before we pull back and do another one of these. But we get up, we die. We get up, we die. We get up, we die. So that doesn't mean it won't happen. But I'm saying I'm paying very close attention because what is the 30-year bond? What are they telling us? What is it saying? Why can't it decide to really just kind of get itself up above that resistance? Do they not believe that rates should come down? Do they not believe that rates will come down? A lot of stuff going on. So that's the 30. And I'd be looking for this thing to catch and start getting itself above 133.22 up towards here before we get a 4 internal, or a 4, a 5, and then we get that final move up to hopefully 128 or 136, somewhere in there. Now, 10-year note, it basically is the same picture, but it's going a little bit better. It did not get stuck at 116. Seemed to for a little bit. Got up, went down, but then went up and went through it, got up to 117, and then died. So again, even if I kind of 1 of 5, 2 of 5, 1 of 3 of 5, 2 of 3 of 5, 3 of 3 of 5, 4, you went too far. So it's like, wow. So is this 1, 2, 3, 4? If it drops below that, we're dead. And it's all over. Then I'm going to have to count that as the minute 5 and put a C weight above it, et cetera, et cetera. And again, what are we looking for here? 120. Against the big drop that we did from 2020 down to 2022. These October lows here coincide with the market's October lows. Now we're having trouble putting in any more rally. And the market's deciding it wants to explode higher again. You see the dichotomy that we got going on here. So we need to just play it day by day and see what the market is really going to tell us and what's going to happen. So again, one more, just a 2-year did this incredible rally off of its lows. And bam, dropped over a point in rate real quick. Did a nosedive. If this is the minor 1 and 2, and again, I'm looking for an intermediate B, it's going to be consisting 5 of these. I would think if we're inside that third, what was this? And now it's finding trouble of turning it back higher again. Still very, very early on a Sunday, but I'm looking for way more. If anything, maybe this is just 1 of 3, and this is 2 of 3, and then we're going to get a 3 of 3. Same thing over in the 30, same thing in the 10. 1 of 3, 2 of 3, and then we finally get a blast. One way or the other, I'm looking for interest rate markets, 2-year note, 10-year note, 30-year bond, to make a turn and start heading higher and do it with some oomph. And if that is the case, then yes, I'm looking for the equity markets to follow suit, even though they shouldn't. Whole different story. All right, now I want to go over and I want to talk about gold. Here's the other market that really understands. I know it's down right now, but it understands and it prepares, and it knows that something's up. Something is not right, and it stinks. Gold traders know that. And so we have a flight to quality. We have a flight to safety. We saw it push it above 2,000 again twice. I am suspecting they're going to do it again, and they will do it just in pretty much the same fashion as they did this. And you can see those are pretty strong rallies. This is a pretty strong decline, I'll give you that. That went up, made a slight, ever slight new high, and it's now coming off in 5. And these are the hourly charts. So if I had to say 1, 2, 3, 4, 5, maybe we rally in the ABC, or this is going to be another irregular 3, A, B, C, whatever that is. 1, ABC, 2. The markets are throwing irregulars in waves 2 and 4 on a very, very consistent basis now. And this would be a whole nother asset class that I'm seeing it in. I'm seeing it in equities. I'm seeing it in bonds. We just talked about it in the bonds. So, but I am anticipating that gold's rally will pick up and continue. And I am looking for 2138, where this current rally would be 100% of the previous. 2138. So I'm looking for it to get itself back above of 2,000 and really even start breaking above, like it only got up to 6, 8, or 9, getting above 2010, 2020, 2030, all the way up and break to new highs, actually. And I would be expecting it inside this particular wave pattern. Lastly, because I don't want to be hanging out here too long and creating a very, very long update, I did actually also spend a lot of time on the dollar and going over what the hey is this big move. I'm going to pull this all the way back out to my monthly, because this is where I went to. And I put a primary wave down there. I don't often really go into such detail with the Forex markets, because they in terms of just like a long-term picture on the dollar, I don't think it's possible, because there's too many variables and too many cross rates and too many things that actually can go in. But I will take it up to a primary degree, but that's probably about as big as I'm going to want to get, unless I get, some solid input somewhere. So right now I'm calling this an A. So that's why we got to just continue to get all of these Bs, and until I can get a primary B wave all the way up. So I get an A, B, C, X. Now I get another one. So it is a primary B wave up. And right now, that's all the info I got in terms of, the dollar index. So bringing it all the way back down now, that high that we had at 114, that's an intermediate A wave. We're in an intermediate B wave decline. So I'm going to bring it down to here. There's the A. What's going to be inside this intermediate B wave down, which, by the way, I would suspect that's going to get below par of 100 level. Not right now, but eventually we're going to do another one of these, and it's going to bring it down pretty low. So I am looking for somewhere out there for the dollar to collapse. It's just going to be so counterintuitive, folks. It's like what I'm reading here. If the market really was reading the signals right, it's not a matter of let's go. We are all healthy and wonderful and clean. Let's just keep rallying. It's like, no. I don't think the market's telling me that at all. So I'm not sure why people want to hang their hats on that one. But here we are in the dollar. So I got this 5 waves down, or at least, yeah, I probably can do all 5 down. That's an A wave. This is a B wave. That's what these fibs go for, the B wave. So what's the B wave? An ABC structure in and of itself. I've not marked it, but my thought is A of B, B of B, and we're in that C wave rally. What should that C wave rally look like? I can do one more. And let's go use these again. I'm going to go up to the top of the A and down. If indeed that's the low, now you're going to see a whole bunch of stuff. There's the ultimate target, 109. But look at what we got all coming in between. So here we are here. We got stuck at the 103.11, which is the absolute bottom level here. But there we are, hanging out, more closer to 103. So we got to break 311, then 385, 104.14, 104.447, etc. And then we should, if indeed they're going to put a B here and we're in the C wave, it should break above that high, which is 105, almost 106. Get itself above 106, get itself above the 200 SMA, right? Right now we got a bunch of flat moving averages, but they should respond. Here's all our resistance all the way up, 106, almost 107, 107.779, 108, 108.912, 109.446. With an ultimate that it could push to 110 again. Boy, what'll that tell us? What do we think if it's going to 110? Where do we think the bonds are going to be? What's going to be the catalyst for the dollar to rally that strongly in the face of everything that's going on? That the Fed has no choice and they're going to have to just raise the rates, no matter what, for whatever the reason is. They've got to get the stuff off of the balance sheet. They've got to get things back into line. And they're in a heap of trouble. Let's just leave it at that. So if I'm looking here, A, B, C, and then, folks, and then a massive dollar collapse as we do the C wave down. All right, this is where I'm going to end it. Kind of went over the futures market for tomorrow morning. So that's going to be the only update for today, is this big picture plus a little bit of the Elliott wave update that I normally make. Have a great evening. Catch everybody tomorrow. And the next update will be on Monday, the 27th of March.